Good morning, traders. It's Thursday, 8:01 a.m. Chicago time on the 3rd of March 2016. Thanks for joining me. This is another Trader Bite. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. The overall sentiment, with oil being lower, gold flat, treasury futures flat to slightly lower. Uh, European Treasury futures slightly higher, Asian markets slightly down, Japanese yen lower, Eurozone equities down across the board slightly, US equities slightly down, and the dollar slightly down. It looks like risk is mildly off the table today. Markets allocating to nothing. It seems like with the overnight session, the higher time frame is not acting on the market. There's some news out of China with the market services purchasing manager index falling to 51.2 from 52.4. So it's showing that there's further slowdown in China. Also, China's state-owned enterprises are likely to be downgraded by Moody's, and the PMI in Europe was pretty bad. So overall, the market's digesting bad news still. And this morning we had um, non-productivity at negative 2.2 versus negative 2.9, so slightly higher. Initial jobless claims 278,000 versus 270,000, also slightly higher. So overall, the market's in a what do you call that? In a holding pattern in the overnight session. It has not moved away much from yesterday's close. Let's take a look at where we are here. I'm going to try to make this as short as possible. Before I get into the technicals, I want to remind everyone that we have an open AMA scheduled for 12 Central, 1 p.m. Eastern. This is the usual time we're holding AMAs for on a weekly basis for S5's traders. And normally we move it to 3 o'clock for the public version. That way more people can attend, but having had a pretty action-packed week, I forgot to move the invitation to 3 o'clock Central, 4 o'clock Eastern, right at the cash close, equities cash close, and it's been pushed out to so many people that I cannot change it at this point. But the video will be available shortly after. If you cannot attend, it's important to register so that you're sent a message with the video recording if you want to look at it. We're going to go over a few questions, but most of the session will be focused on pre-packaged or pre-existing questions that need to be answered that are very typical relating to execution, entries, and things like that. Anyway, let's start with by reviewing what we said yesterday, what was said yesterday. This is from yesterday's Trader Bite, about 13 minutes in. This was Hypo 1. The expectation is that we open somewhere around the 70, 71 area, and the expectation is that we would take out the prior day's highs as outlined here. We'll take out the prior day's high, and then the expectation is we would test down into that 64.75 area, but ultimately push through to the 85, 86 areas you see with that arrow there. That's the primary hypothesis. Now, with that being said, it does make a difference whether or not the market tests higher, then drops, or drops, then tests higher, or tests higher, drops, then rotates up. Those mean slightly different things in my experience, but it doesn't matter. The main factor is that this high is likely to go with the trending market on Tuesday, finding balance up here, building a lot of energy up here, like I talked about yesterday. You can watch yesterday's video to get an explanation of why that expectation existed. That's the point of the Trader Bite. I don't just post a chart saying, here's what I think will happen. I'm going through the logic behind it so that you can pick it up and apply it in your own trading. That's the goal of these Trader Bites, after all. But with it having closed at the near the top tick on a high energy area, On a trending day, the expectation is we're likely to take out that high at some point. Um, and with a lot of volume going on right up from 64.75 onwards, then the expectation is to test below. It's a much more confident long for the OTF to take if they test below the weak area, which would be right there. That's the beginning of the LVN zone, and then start moving up. You can get a lot more confidence pushing higher if it fails to push lower. That's a very, very classic thing. So that's a review of what we said yesterday. Again, those videos are always available for you to watch on the YouTube channel. What ended up happening is we ended up getting a choppy open. As you can see here, let me expand this chart, make it bigger, and enlarge. Choppy open. We got the test lower towards 64.75. We got to 66 and a quarter. We missed it by a point and a half, 6 ticks. And then you have this strong rotation up, takes out the high by a tick. We have a 1 tick failed auction right here. 1 tick failed auction. The market rotates down almost all the way. The market at this point is very balanced. The profile is very balanced. So I was throwing out cautions on that. It's very balanced. Sit on your hands, let it break, and then see where it see which side is leading, and then go with that side. But it kept pushing back and forth through the range. You can see that it's pushing against the range, the value high, and so on. Value high was down here at that point. It kept pushing both sides. We went neutral by taking out the prior day's high. After taking out the low down into that 64.75, we went neutral and we closed on a neutral extreme, another neutral extreme day. These are neutral extremes are generally fairly rare because neutral generally is around 30 to 35% of the days in this product. A neutral extreme is only about 20% of those. So multiply those out to get the probability of neutral across all days. Those are round figures. I posted the study on this a while back. I don't remember the exact numbers, but it's about those numbers. It's around those numbers. But in either case, we had a neutral extreme close. We had a good volume on the close. You could see a lot went off on the high. The market could not rotate back towards the IB and back into the prior day's range. The expectation is for a higher high overnight in the extended hours, just like we expected it here. The expectation is for a higher high, and it did push to 87 and a quarter. Yesterday, it stopped short of that 85 target, which was the point of control, naked point of control from the 6th of January. It stopped just a couple ticks short of that, and then we basically sat sideways overnight. So when we look at the overnight session, we'll pull up the overnight session. You can see that not much there to account for a fairly balanced profile. A lot of volume going on down between yesterday's high and the overnight low. The overnight low is pushing against yesterday's value high right here, and it's sitting sideways and looking weak. This is likely to rotate back down into that 1974 quarter. That's the expectation here. The market looks like it's pushing up against those key areas above. So let's look at our major profile here. So when we look at where we are, I posted an image yesterday of what was expected. This is what it looks like. Hang on. Here we go. I posted this image yesterday outlining these red lines are the low volume nodes, the green lines are the high volume nodes, and I'm showing that we're up against a high volume node. We ended up pushing through to the next area, so we moved out of this area here and have started moving to this next area. The expectation is that it is likely to stall in this area and start turning over. We're in the lower volume area. We're in between two major high volume areas here on the composite. This is the way things are shaping up, and so therefore the market is likely to rest from here. So what is my expectation for today? My primary hypothesis for today, given the way this has played out, it is the same as yesterday. It's basically the same play as yesterday. We're likely to open in range, out of value. The expectation is for a choppy open, a responsive seller to come back in, potentially down. The overnight low is value high. We're likely to push in. If we push in through that overnight low, we're likely to fall into the magnet at 74 and a quarter. The expectation is that it would walk itself down to the 74 and a quarter and just bounce around in here. It's Thursday, as you already know, but what's more important is that tomorrow is non-farm payroll and unemployment. So there's likely to be a lot of shifting and shuffling of risk on the books, being as we are in the futures. This is a hedge instrument first and foremost. So we're likely to see action all the way into the close today in preparation for the non-farm payrolls. We've had a pretty decent rally here over the last couple of weeks, and so there's likely some positioning and squaring up of positions. So if we look at the run from the bottom here, you can see we've had a pretty decent run from 1804 or so all the way up to 1987. So we're likely to see some OTF action during the day. And what does that mean? Given that we are in range, given that we are quiet in the overnight session, we're likely to see intermediate OTF, meaning it's likely to rotate back and forth, but the swings are likely to be slightly wider than normal. So again, this will be just like yesterday, just like I talked about yesterday. This will likely be another day of emotional trading. This is the type of day that just sucks traders in because they take a position, they get stopped, they see it run the other way, and then it comes all the way back, and then they take the position again, or they fade that position. And the fact is, if you just bought and sold somewhere in the middle of the OS yesterday, you made and lost money. Our mind has selective memory. Confirmation bias is what it's called. You'll just remember that you had a good trade that got stopped, and then that cost you money and the trade worked. But what it doesn't recall is that the market actually came all the way back through again. So that's when you get folks get emotional, and that's where we want to prevent that. We want you to stay objective, keep your mind on what is the market doing. Who are the participants? What is the likely participant? Are higher time frame participants in here? Are they intermediate term, meaning they're respecting day type levels, meaning opening, high, low, close of yesterday, points of control, all that? OTF does not care about those levels. It generally pushes right through. They're operating in 30, 40 point ranges. Or is it short-term traders just one ticking the last high, one ticking the last low, then rotating all the way back through, and so on and so forth? And the way to detect that, several tools to detect that. One of them is the opening type, the opening swing, the value of the opening swing, how wide it is, how it's treated. If the opening swing is something that's trampled on all the time, then you have short-term traders. You want to stay away from trades that are from the inside out, meaning pullbacks to the mid running out, or pullbacks to a level for a break higher or lower. It is more likely to be like yesterday, trades from the outside in, test a level that is far from the middle or far from where we are, to return to where we are, to return towards balance. Anyway, I can't cover all that in the Trader Bite right now with detail, but the thing you need to remember is your objective as a trader is to stay true to the statistics, and to stay true to your plan, and to, as much as possible, be objective with what your assessment of the market. And one thing you can do to help you do that is to just speak out loud. I know you'll sound like a crazy person, but speak out loud. Okay, we opened here, we tested the high, rejected at yesterday's high, returning to the mid, unable to break lower, rotating back up, looks strong, looks like buyers are pushing in. Let me see if I can lean against something. Oh, I'm in. Oh, got stopped. Looks like it's still balancing, that sort of thing. Just talk it through so that your ears can hear your thoughts rather than your brain just processing everything internally. It helps you stay in tune with what's happening. The other thing that I do is to just go back and play the day back. Just scroll back and play it bar by bar and narrate what happens to the present moment. If you feel like you just do not see what the story is, narrate it in a shorter time frame. I don't use 15 minutes to narrate. I look at the two-tick Renko and I just narrate each bar and try to, my goal is to get in alignment with the story and not to invent my own story and my own fabrication. Good luck. I hope that helps you, and I'll catch you at the AMA at 12 Central, 1 Eastern. If not, just register so you can get so we can get a copy of the video once we get your email. Take care.